Good afternoon, everyone. Today's title and of the video we're going to talk about is I'm going to show you how to make money. I'm going to show you how to become a tax-free millionaire by investing in a Roth IRA. So I know you wonder, like, man, how is Kadero going to show me how to make $1 million tax-free? Because that's the name of the game. You can make $1 million a lot of ways, but how can you make it tax-free? Meaning that you don't have to pay the government no money of your dough. Tax-free earnings, tax-free returns, tax-free based off of being a millionaire. So if you're interested how you can do it, continue to watch the video. But before we start and get to how you can become a tax-free millionaire, I wanted to stop and say, hey, like and subscribe to my channel. What you should see is on the right side of the video. You're going to see a red button. Click it. Or at the bottom, scroll down and just click subscribe. Become a member of my channel. Learn how to invest, become a millionaire, or how to start a dividend portfolio, but ultimately financial freedom. So if any of those type of topics interest you, if you enjoy this lovely content that I give you of different type of dividend stocks or stocks you can invest into, I'm the person to go. I'm the wingman. I'm Cordero Hudson. I'm here to just aid you and assist you on your journey of investing to either retire early or, hey, at least for retirement. So let's dig in. So, how can you become a tax-free millionaire? The cheat code is the Roth IRA. Now, the question is, what is a Roth IRA? What are the benefits of Roth IRA? How you can get started, and we're also going to talk about a couple either stocks or instruments that you can put into the Roth IRA to grow your wealth to $1 million. Are you interested yet? If you are, keep on listening. So this is how you do it. What is the Roth IRA? The Roth IRA is an individual retirement account that has special tax advantages. Basically, the money that you make on your job, your paychecks, those are taxed. It's already taxed because basically when you look at your check, you see your gross, you see the taxes that's being taken out of your money, and then the residual, the remaining money that you have, your take home, that is tax money because at the end of the day, you have to file your wages with the IRS, and then that's how sometimes at the end of the year or the following year where you see if you get a refund yet. So the money that you put into your 401k, that's pre-tax. So money before you have to tax it. The money that you pay that you use to pay your bills, to buy eggs, water, popping bottles, buying McDonald's, that money, that the residual money in your paychecks, the net income on your paychecks, those are your tax dollars. And so you can use that money to put into a Roth IRA. And once you put your money into the Roth IRA, it will grow tax free. So how does the Roth IRA works? You contribute to the Roth IRA with your after tax dollars, the money that you've already been taxed on, your money that you see on your paycheck at the end of the day. And once you add the money into your Roth IRA, you get a Roth IRA through Fidelity. You can get a Roth IRA through N1 Finance, Vanguard, and the magic happens when basically you buy either ETFs, stocks, or whatever you need to within this Roth IRA. The Roth IRA is just a vehicle. Think of it as a vehicle that you put your money into, and within it's a tax sheltered account. And so once you put your Tesla or VU or Microsoft or Apple and you buy it within the Roth IRA, all you gotta do is you wait until you're 59 and a half, and you can withdraw all of that money, dividends, all of the capital appreciation, all the increases that you've made over the past, let's say 20, 25, 30 years, tax free. I know, right? Cheat code, right? And right here, it just shows right here just the filing statuses of basically the IRS know that this is a cheat code. They know that basically by you putting your after tax dollars into a Roth IRA, it's a cheat code to grow your wealth tax free, so that in 20, 25 years, you can have a portfolio of 200,000, 500,000, at least, or at least a million, depending on how much money you contribute per month, and basically withdraw all that money in retirement tax free and not have to owe the IRS any type of money. And so you know that with this cheat code, the IRS is going to put some type of cap. And so right here for 2022, the cap, if you're single, and when you for your taxes, if you file single, the max amount of income in terms of that you can make is $129,000. So that's how much money outside in the real world that you can make, that you can contribute to the Roth IRA. And the maximum limit that you can put into the Roth IRA for 2022 was 6,000. If you're 50, you can contribute 7,000 to this Roth IRA special account. Now, as of 2023, the income threshold limits have increased. Now, individuals who make under 138,000 per year can contribute to their own IRA, and now it went up from 6,000 in 2022 to 6,500. And then also, don't want to leave you guys out who are married and filed jointly. In 2022, you and your spouse, if you put both your incomes together, if you both make under 204,000, you can contribute to your own Roth IRA. And then also special, what they don't tell you is that if you are married and filed jointly, you and your spouse can also have your own individual Roth IRA. Just because you're married, and yes, when you marry, you consider as one. Most people think that, okay, if I'm married and I filed jointly, that we can only have one account because we're married. Nope. If you married, you can have a Roth IRA account, and then she can have a Roth IRA account. And it's a cheat code because then once you fully fund yours for the year, you get work on either your income or her income, or put your incomes together and fully fund hers. And that's how you get into financial freedom quicker. So what are the benefits of a Roth IRA? There's no required minimum distributions. So with an actual traditional IRA, typically your 401k is a traditional form of a traditional IRA. Once you hit a certain age, like right here, the beginning of 2023, so RMDs start at age 73. So now at the age required minimum distribution, and basically at the age 73 for a traditional IRA, the IRS the government is going to force you to take out a certain percentage of your IRA. And so what happens is that at a certain age, they're going to force you, with a traditional IRA, going to force you to take out a certain amount of percentage. And what happens is that if you want to take out 50,000 per year, what they're going to do is they're going to increase the required minimum distributions per year. And then what if you only want to take 50,000, and then they're going to force you to take 60, 70, 80,000, and then that is going to push you into a higher tax bracket. But with a Roth IRA, there's no required minimum distributions, and then also it's tax free, right here. Also, with a Roth IRA, there's no income tax on Roth IRAs. So once you put your money into, you put Apple, VU, VTI, VGT, Tesla, and your portfolio grows to 500,000, 600,000, you can take that money tax free, and there's no income tax on that. That's great. Easy withdrawals, no double dipping, flexible timing, extra time to contribute, and also with the Roth rate, just like with traditional, once you hit a certain age, like at 50, the contributions, it goes up because they want to, as you get older, they want you to contribute more so that you can be less reliant on Social Security. So as it shows up here, that in 2023, if you at age 50, you can contribute $1,000 more to your Roth IRA. And so for me, I'm nowhere near 50 right now. So I can only contribute 6,500 because I'm 34. But if you 50 or older, you can contribute $1,000 more, and get to that your goal quickly because of that the age rule. Sweet, right? And then right here, there's no age limit to open. So how do you invest into your Roth IRA? What you do is that you open up an account with Fidelity, with M1 Finance, with Vanguard, with Charles Schwab. You choose, click down, you choose Roth IRA, you put in all your information, and then boom, you have created an account. From there, what you do is that you now have to figure out what do you want to put into your Roth IRA. In your Roth IRA, you can put in individual stocks like Tesla, Microsoft, Apple. You can put in bonds. You can put in ETFs like VTI, VGT, VUG, and index funds, funds that follow a particular market. And so it says, what is the difference between a Roth IRA and a traditional IRA? So to become the tax-free millionaire, you invest every month or so, or at the end of the year, depending on how you want to do it, until your Roth IRA. And the traditional IRA is more along the lines of like investing into your 401k. Both are essential, but both you can utilize in different ways. Remember, the 401k is a traditional IRA, and the money that's been put in this is tax deferred, meaning that you won't be taxed until the future. The Roth IRA, your money is being taxed right now through your paycheck, and then you put it into this Roth IRA, and then your money grows, and you don't have to pay tax on it whenever you take your money out in the future when you're 59 and a half. Now, uh, the next topic we're going to talk about with the Roth IRA is lead by example. I always got to lead by example, and here is my Roth IRA. In my Roth IRA, I have with Fidelity, and with Fidelity, I have roughly $8,956, and with here, I have a couple dividend stocks: Arbor Really Trust, AMP. I have AutoZone. Get in the zone, AutoZone. I know, right? I got Deere Company. I got Elevance, which is Blue Cross Blue Shield. I have Parker and Hannafin. I have Lowe's. It's a high growth dividend stock, and then also have Tesla. So this shows right here. I put in about $450, $500 per month into my Roth IRA, and I want to let it compound and let it grow. And hopefully, I do get, work up to a portfolio of $1 million because, hey, remember, whatever money that I put into my after tax, my after dollars into my Roth IRA, it grows. And guess what? I'm only 34. Let it grow 25, 30 years, and let it compound to 500,000, 750,000, maybe $1 million, right? And that $1 million invest into this Roth IRA account. Well, I can withdraw this money out tax free. This is the cheat code, the equation. Invest into the Roth IRA. Pick whatever stocks or ETFs that you want to. Stay consistent. Buy $250, $300 worth of whatever you want to put into it. Let it grow, and it will grow. In a bear market and a bull market, it will grow. So now, lastly, I'm going to go over the different instruments you can buy into the Roth IRA. So we all know that you can buy regular stocks into your Roth IRA, but then you also can buy growth ETFs. And when you have a Roth IRA, you have about 20, 25, 30 years to let your money grow. And so you want high growth assets into your Roth IRA where you can dollar cost average per month. And I'm going to go over two. One is QQQ, and it QQQ mirrors the NASDAQ index. So it follows the NASDAQ index, and we know what's in the NASDAQ has pure like tech stocks, but it's not just tech stock. I'll say it's about 75% tech, but it has other holdings for it as well. So QQQ, which mirrors the NASDAQ index, top holdings is Microsoft and Apple, right? So that is top heavy, top heavy in Microsoft, Apple, baby, yes. But then right here, you see PepsiCo. So Pepsi is not really it's not a tech stock at all. It's actually a consumer staple. But all the other ones is in the top 10 holdings is tech. And then also it pays a small dividend. It's not really a dividend ETF or fund, but it does pay a 0.76%. So, and it does grows its dividend roughly 10.41% because tech stocks really you buy them for its growth, and then the dividend is a plus. So with a 10.41% dividend yield, you really buying it for the growth, and the expense ratio. So to own it, you're going to pay a 0.20% expense ratio for the account manager to manage the ETF of QQQ. And then lastly, SCHG, which is Schwab Strategic Trust Large Growth. It costs $59.74. This is also a high growth, and the holdings in SCHG is again top in Apple and Microsoft, and then as you go down, and so it's a lot of tech companies. But then you have United Healthcare, which is healthcare. You have Visa, and then Mastercard. So I went through QQQ. I went through SCHG. These are two different type of holdings that people tend to buy and put into their uh, their Roth IRA, and then they tend to just put in $200, $250, $300 a month, whatever you can afford. And then as you make more money, you just dollar cost average. So when the market is up, you put in $200, $250 per month. When the market is down, like today, or in a recessionary period like now, put in $200, $250 per month. And then what happens is after 20, 25 years, your particular money going to grow. You don't believe me? Let me show you. Lastly, I'm going to go through an example of you starting out with just $0. You put in $500 per month into either QQQ, or you put it into SCHG. And so starting out with $0, you put $500 either into QQQ or SCHG, and you put in it consistently, you would hit $1 million tax free millionaire status within 24 years. That's if you individuals who start with $0. Like if you used to start right now, you're 30, 35, 38, and you wanted to have $1 million by the time you retire, and you didn't have any money saved up, and all you bought was QQQ or SCHG, all you had to do was put $500 per month, and boom, you will have $1 million within 25 years, and most importantly, it'll be tax free. So this $1 million, $276,758, you'll be able to withdraw that from your account, and you won't have to pay any taxes, no social security, no employee tax, no FICA, no FUTA, none of that. It'll be all that cash money. And now for the individuals who have a little saved up, say for example, you're not starting with $0. Let's say for example you're starting out with 10,000, right? So if you start out with 10,000, you've already on a good foot. And so this shows right here, if you put $500 per month into QQQ or SCHG, and you sticking with it, you'll be able to hit the $1 million status tax free, set up within 25 years, within 22 years. So I just showed you two examples that it is possible. You guys can do it. Stick with it. Budget. Figure out how much you can do. Build up to $500 per month. You can only do $200, $250 per month. Then just do that. But most importantly, you can do it. Find what funds or stocks you want to invest in. Be consistent. Stick with it. I believe in you. I showed you that I'm doing it. You can do it as well. And most importantly, let's make money, right? Let's make money. Invest into a Roth IRA. Put stocks or ETFs into your Roth IRA. Some famous ones are VU, VTI, QQQ, SCHG, and most importantly, let's get this money. And if you have enjoyed this content that I've delivered to you today, how to be a tax-free millionaire by investing into a Roth IRA. If you enjoyed my content, like and subscribe to my channel. Click the red button, subscribe to my channel. Also, share with your friends because I'm pretty sure a lot of your friends or family members don't know how to make tax-free or money, or most importantly, how to be a millionaire, or let's be at least 6 figures tax-free, right? Because even if you can't do be a millionaire, most importantly, you can do you make a $500,000 portfolio, right? So scroll down, like my channel, subscribe to my channel, and I hope you enjoyed everything, and hope you have a great day. All right.